Hello, hello. Okay. Good morning, Janby. Hey, BL. Hey, Vel. Hey, Ola. How are you doing? Good to see everyone here. Good morning, Diana. How are you doing? Super long day today. Feels like a long day since yesterday. I know I'm not in the screen. You talking? Grabbing a drink. All right, I'm back. EP. um, I've gone past sleepy. I've gone past sleep. Hey, Lindsay. I get that right. Good morning, Matic. How are you doing? Alrighty. Anyone trade last night? Anyone traded well last night? It was relatively straightforward. So it was relatively, straightforward. Before the news, dollar weakened. We saw that big drop, um, which actually worked quite well because it gave us even better entry positions. So that was very good. I trading since 2 a.m. last night. Continued trading, watched a bit of football. While watching football, was still trading all the way through to this morning. Took a bit of a nap, and I'm back to it. So, sugar or caffeine? Let's have a mixture. I'm currently on sugar and caffeine. Little bit of blood in the little bit of blood in the veins, mostly sugar and caffeine. Hey, Hey Bello, how are you doing? 93, Bello 93, good morning, how are you doing? Hey Pips Apprentice. Diana, yes I am. I might lose a few followers, I might lose a few followers on the session if I said to declare this, but yes, I'm a Manchester United fan. Been following them for many years now. Gone to watch them in Old Trafford. Um, couple of other times as well. A couple of times at Old Trafford. Not doing so well for the last couple of years, but you know, it's it's at such a low point. The only way is back up. Hopefully, crossed. Hey Ater, how you doing? Hey Spiros. Ola's a Chelsea fan. Well, good. Not doing super well either. Wrong red. Sorry, Daniel. I'm not going to get into that. It's no point fighting about that because I agree. At this time, I agree it's the wrong red. Better the red on the football pitch than the red in our trading accounts. So no matter what, staying away from those reds. Um, which sessions do I trade? I trade all sessions. Helen's D, trade all sessions. Diana used to follow them a long time ago. A lot of people have. Busy day for Jin SMB during this. Yes, SMB at 3:30, so not very far away. And then Bank of England later at 7 p.m. I'll see how I survive. I was thinking of leaving the stream on, but I'll see how I survive on that. Hey Jimmy, how you doing? Hey Desiree, how you doing? Hey AYJ, hope you're well. If I trade all sessions, when do I sleep? Hardly. I get a lot more sleep now. I used to really survive on 2 to 3 hours every day. Kind of getting old, so getting a lot more sleep now. So planning the trades a lot better now. Yeah, but if you knew me, maybe 3, 4 years ago, I'm constantly online. People have always commented like, when do you sleep? Because we have clients in Canada, in the US, in the UK, and I'm constantly talking to them. So they're like, why are you always online? All right, enough of that. Good morning, Buba. How are you doing? Khalizni says, you mean to say you trade Asia, London, and New York? Yes. I come in, so I'm in Singapore, right? So I come in the morning, 8, 9 a.m. in the morning here in Singapore, GMT plus 8. I trade the Asia session. While I'm here with you guys, I'm trading during the Euro and the London session. And then when I head home at night, I do trade the US sessions as well. So I do all the sessions. It's just into the US session, it's just how long I go on with that. It's how whether the markets keep me interested for long enough, right? Buba says, do you have time to do other business? I have. Those are a couple of you have spoken to me on the one-to-one sessions. You probably realize that I do multiple different things. I look at property investment in Dubai, relocation, helping people relocate to Dubai as well, into the UAE. I do a lot of speaking events. I travel for speaking events. I'm heading to Dubai for an event as well. Do a lot of consulting work for brokerages. I do a lot of writing, webinars, trading myself, coaching people like yourselves as well on a one-to-one basis. Property, stock investments. I do everything. Keeps me interested. If not, I get bored. All right. Okay. So enough of that. Let's keep going. Welcome everyone. Thank you for joining me on this daily market analysis. Good to have you guys here with me. I am on coffee and caffeine and sugar at the moment, so I am going to fluctuate from high and low. But if you are new to the session, do drop a message. Say hi. Let me know that you're here. Let me know where you're joining us from. If you were watching the Champions League last night, let me know what you think about the scores. Let me know which team you follow. I've just declared I'm a Manchester United fan. Let me know which team you follow, whether it's the right Reds or the wrong Reds. We will be today talking about what happened earlier this morning with the FOMC interest rates decision or non-decision. And then at 3:30, we do have the SNB, the Swiss National Bank, with their rates decision and looking at a rate hike possibly. And then with the Bank of England with rates decision later on tonight, 7 p.m. GMT plus 8 well. So we'll go through all that in terms of the fundamentals. Then we'll look at the technicals on where price is, where it could head towards, and then hopefully look for some possible trade setups. I'll share with you some of the not exact trades I got into because I was scalping last night at 2 a.m. through to 5 a.m. ish, right? So I'll share with you some of the general directions that I was getting into, and then we'll look for some possible trade setups as well. But as we talk about trade setups, quick disclaimer, any information contained on this webinar should not be construed as advice and is presented as educational material only, so please do your own due diligence, because the contents of this webinar is not intended to be a recommendation to trade a financial product, and your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. Okay, so again, remember that if you have any questions, put it into the chat. If you can help me out, click that like and subscribe button. I think the more of you who click thumbs up on YouTube and on the rocket ship on TradingView, we kind of get more people onto the session as well. Okay, so help me out with that. And if you have not already, do join the Discord channel with the link there available for you guys. All right. So what happened? Pip's apprentice said no football, please. Okay. Hey, Angel Case, how you doing? Atira's a Barcelona fan. Hey, Media, how you doing? Hey, Vez, good morning. I'm here. Restine News, good morning. How you doing? Others say Asia session is of low volatility. Yes, Asia session is slightly lower volatility, but you do kind of catch some continuation on moves from, or retracement of moves from the overnight session. So there are some opportunities there. And good morning, Carsten. How are you doing? Hey, D-Train, happy Thursday. With all that, now coming back to this, 2 a.m. this morning, we had the Fed Reserve keeping interest rates at 5.5%. You can see here, no change on rates, keeping it at 5.5%. Then, so that wasn't a surprise there. We kind of expected that with the CME percentages at 99, almost 99%, almost 100%, that they're going to hold rates at 5.5. I immediately went on to read the statement here. Right, and I think I was sharing it that, let me just bring this up, Discord, where I was sharing that news with guys, right? So this was during the news release. As the news release, no surprise, FOMC held at 5.5, rather hawkish view on the statement, DXY bouncing off support and to the upside, rushing out type that. So I was looking at it bouncing up to the upside, keeping to the plan. Okay, so why did I think that the statement was rather hawkish from the FOMC? Hey Darius, how are you doing? Good to see you. All right, why did I think that the FOMC statement was rather hawkish despite holding rates at 5.5%? Is because they indicated that economic activity has been expanding at a solid pace. Good news for the US. Job gains have slowed in recent months but remain strong. Again, good news for the US economy. And unemployment rate has remained low. Again, good news for the economy. Inflation remains elevated, but at least it doesn't say compared to the last time they said, I mean, a couple of months back, where is this? Where was it? Says inflation has eased somewhat but remains elevated. I think there was one point where they were saying that elevated and could stay. I think later on it says that it could stay high, right? But this time they say that it remains elevated, which we know based on the CPI data that has, and the core PC price index that has been released. Then banking system is sound and resilient. We had that concern previously, but now looks like they're over it. Tight credit conditions for households and businesses are likely to weigh on economic activity, hiring, and inflation. Although this sounds a little bit dovish, what they've said here is still quite hawkish. So looking at that to still boost the dollar to the upside, that's still the same, right? So straight away, the first paragraph to me, right, hawkish on the dollar, hawkish tone. And then after that, this one says a little bit of concerns. So they still seek, this is no surprise here, try to maintain the rates. Again, no surprise, it's all the same thing. And then, right, committee will take, so they held rates with committee will take into account the cumulative tightening of monetary policy, the lags in which monetary policy affects economic inflation, and economic and financial developments, right? So there have been increasing rates over many months now already. Now they're saying, okay, we've done it for so many months. Let's look at the cumulative tightening effects, look at the lag, give it some time to bring inflation down. So again, no big surprise that it's committed to this, to that 2% target, and then continue to monitor implications, to prepare to adjust the stance of monetary policy as appropriate. Again, not a big surprise, but okay, so there we have it. So that's why I commented on the Discord channel where I was saying that based on the statement, this from here onwards, it's pretty much a copy paste. I wouldn't say it's a copy paste, but it's very similar to what they've been saying over the last couple of sessions. But this time, economic activity, solid pace, jobs slowed but remain strong. Employment has remained low. Unemployment has remained low. So it's all quite good news there for the US. And because of that, what we actually saw on the dollar index, ignore this tail. It's only on this price feed happens. At 2 a.m., 5.5% with rather hawkish statements from the FOMC. We saw the DXY push up from 104.76 immediately within the hour up to 105.18, continued to break, and this was our analysis. As it breaks above 105.30, it went up towards that 105.65 level, and then retraced a little bit before consolidated and then retraced a little bit this hour, now possibly pushing back up again. So it's moving as planned. The only little bit of a surprise, a little bit of surprise, which actually worked in our benefit, was that the dollar weakened before, right, the hours before the news, right? So we were right at that point there. We're looking for the inverted head and shoulder. What happened was it weakened down to 104.70, right? This support level before pushing up. It actually gave us better entry points as it retraced. So I'll take all of that away. This is pretty much done already. Okay, so that was what happened with the Fed Reserve from last night or early this morning. And then the press conference, right? The press conference, not going to play through the whole thing, but I was watching that, one ear watching the press conference, one ear watching the football. Basically, you look at the headlines there. Explain that long. I think it's a price feed. There's a difference in price feed there, Carsten, because if I looked at the DXY on another pair, on another price feed, there wasn't a big tail, right? The big tail is not there. And if you looked at DXY on another price feed, no big tail there. So if that tail was some price feed or something else that happened, which might be a rollover, might be for whatever reason we saw that. Okay, so if you looked at different price, other price feed, not happen. But that's why I said, just ignore that tail. Not sure what happened there. Okay. So looking at the headlines here from the press conference, squarely focus on dual mandate. That's fine. Expect labor market rebalancing to continue. So looking at the unemployment rate, you look at that one. Unemployment rate at 3.8 remains low. Might climb up a little bit, but possibly not going to affect their decision soon. Okay, and then after that, you can see that it holds. If the economy is stronger than expected, the Fed must do more. The economy appears to have significant momentum. It's all very good news. All very good news there for the US. It's plausible that the neutral rate is higher than the long-term run rate. Not making a decision about rates. Not making a decision about rates, about if rates are sufficiently restrictive. Want to see convincing evidence that we have reached appropriate level, right? So it's still very data dependent. They are, with that statement, they are leaving the door slightly ajar for another rate hike, right? They are leaving the door slightly ajar for another rate hike. There is anticipation that there will be one more hike for this year, maybe to end off the whole thing. And if you look at the CME data, I'm rushing a little bit because I want to try and talk about the SMB, but maybe I won't rush about SMB. Not too about that. Okay, so you can see that on the 1st of Feb, now we're looking at a 66.5% chance for rates to hold and a 33.5% chance for rates to increase. That's going to be data dependent. And then into December, quite even because there is a lot more data to be had. So the main focus is on November right now, on the data leading up to this November decision right now. So quite a bit more volatility to be had moving forward. Okay, so that was what happened last night or early this morning with FOMC rates decision, rate statement, and press conference. Here was sharing about the GDP for the Kiwi this morning. I did not look at that, catching up on some sleep, but it came in at 0.9%, was revised minus 0.1, revised up to 0, came in at 0.9. Did not have too much of an impact on the Kiwi dollar because it was still being affected by the DXY. Then now in 9 minutes, we have the Swiss National Bank SNB with their interest rate decision 1.75%, currently expected to hike rates to 2%, right? So the thing here is that if they do hike rates by 25 basis points to 2%, very quickly, let's look at the US Swiss franc. So that didn't trigger, we'll take that one away. What has happened here is take that one away. Okay, and just looking at push. So just a quick analysis here for the SNB rate decision to be released in 9 minutes. It's retraced back down to that 23.6 level from last night's move to this morning, right? So it's at this 23.6. I believe that if they do hike rates, right, it should bring some strength to the Kiwi, to the Swiss franc. It's sitting right at that level now because the lead up to the news. I would possibly be looking, not something I'll be trading. You all know I don't really trade the US Swiss franc. But what I'm looking at here is possibly some strength on the Swiss franc, pushing it down towards that 50, between that 50 and 61.8 level before pushing back up again. Right, so a brief drop, a brief retrace before pushing back up again to test that 0.8970 level before pushing back up. Okay, so sitting there right now, we've got 7 minutes to go. Let's come back to it shortly. Now with that, so I'm quite happy to skip through that 5 basis point rate. Yeah, we've done that already. Okay, then this has just changed. If you guys noticed, it's always been 801. Even since yesterday it was 801. Today it's changed to 702. Right? What does 702 means? It means that the first number is how many voting to increase rates. Second is how many vote to decrease. Third is how many votes to hold. So what we've had yesterday, even as early as yesterday, as recently as yesterday, it was at the 801 where we had 8 members, 8 Bank of England members voting, would likely vote for an increase, with 1 voting to hold. Now it's changed to 7, likely that 7 voting to increase, 2 voting to hold. So a little bit more dovish on the to come from the Bank of England. But overall, if it's 702, we are still looking at rates possibly going from, or likely to go from a 5.25 to a 5.5% here for the bank, from the Bank of England. Why it's changed a little bit from 801 to 702 is likely because of yesterday's CPI data, where we saw CPI year on year for the UK go from 6.8. Instead of climbing to 7, they drop slightly to a 6.7. Right? So maybe that one member who was undecided looked at it and said, hey, inflation is slowing down, maybe not as, or is slowing down instead of increasing as we would have expected. So maybe it's worth not increasing rates, holding, waiting for that um, cumulative interest rate hikes and the lag of recent monetary policy adjustments to take effect, might see CPI drop. So it was most likely because of this data that we saw a change in that voting, the possible voting numbers. Okay, so overall, I still do think that we're likely to see the pound dollar drop. Okay, um, because of it going from that 20, so a spike up before coming back down again, because of this small rate hike, 25 basis point rate hike, then a little bit of a more dovish view that they're going to hold, one more person looking at holding rates. Okay, but the pound dollar right now is at an interesting point, at that support level, right? So we thought of this as a contrarian view, did not happen, but it's at that point where we might actually, there is that potential. There is both the upside and downside potential on the pound dollar. I'll tell you about that shortly on. Okay. BL said, read somewhere, money market pricing in 60% chance to keep rates on hold. I would not rule out the chance that they do keep rates on hold. I would not rule out that chance, especially given yesterday's data. And if they do keep rates on hold, that might actually lead to that move. So we saw that push down, test that support, might actually that push back up. But as a more trend following view, I would naturally prefer for it to break downside. So, I like how it's at that support because it does give us that opportunity to take advantage of either a break to the downside or a bounce back up again. I like it at that point. And we'll talk about that shortly. I'm just rambling on a little bit because there is 3 minutes to the Swiss franc, to the Swiss National Bank decision. 2 minutes now. Yeah, we're waiting to see that. I'm looking, it's already pushing down. So I'm looking for that move. I'm not trading this news decision. I'm online with you guys. So I'm not trading that decision, but I'm looking to see if it's going to come down to this point or pushing back up. Okay, let's give it that 2 minutes. And then we have unemployment claims. I'm not concerned about that. President Lagarde speaking. Not concerned about that either. Okay, all the way through to tomorrow with the Bank of Japan and their interest rate decision, their monetary policy as well. So it's going to be an interesting day with the Bank of England. Then after that, tomorrow with the Bank of Japan. There was, I think BL as well was sharing something about the Bank of Japan possibly adjusting the current monetary policy stance. That's going to bring likely to bring some fireworks to the yen. Right, yen has been climbing to the upside with that dollar strength, so that's going to be quite interesting tomorrow. So 30 seconds, let's wait for that to happen. It will be. Yen will be interesting tomorrow. Okay, while we give it that, okay, no. Right, let's see what happens onto the US Swiss franc. It might come down. Any major surprise? Swiss National Bank and their surprises. There, come on. Oh, look at that. Big spike up. Can't see the number yet. Maybe they did a 25 basis point with a, oh, they're held. He also said it's a hold at 1.75%, right? So that explains that big spike. With the rate hike, we were thinking that's going to come down before pushing back up. So with no rate hike, no downward move, no increase, no slight increase in demand, that push up pretty much just went up like that. Right? So without that push down, now we're looking at that spike to the upside there on the US Swiss franc. Take that one away. So now that it's pushing up, what you need to watch out for is that is way outside of Bollinger. Then also now checking this. I'm jumping the gun a little bit in terms of the pairs that we look at. You have another level there. Up there at 0.91, almost 0.9150. That's my. Okay, so a big upside, and also that one there for good measure. Now back to the H1 time frame. Looking at that push up, I do think that we might see that continue to the upside. Dollar is pushing back up as well, so most likely going to see, not going to do anything on the US Swiss franc for now, but most likely going to see this climb up towards that resistance area of 91, almost 9150. Thanks for that, Pips Apprentice, as well. So yeah, that's one of the reasons, apart from way back in 2012, 2012 or 2012, 2014 or 2016, I can't remember the dates, where the Swiss National Bank unpegged against the euro, saw a massive spike to the downside on the euro Swiss franc. With the unpegging, that's when I stopped looking at the US or the Swiss. They do tend to surprise a little bit more than most other central banks. So 1.75% held. Great policy statement. Let's see what it says. Okay, leaving rates unchanged, tightening, countering remaining inflationary pressure. So they do believe that what they have done is enough. Cannot be ruled out. Further tightening may be necessary in the future. Monitor the situation in the coming months to provide monetary policy willing to be active in the foreign market. Okay, so again, they've held rates mainly because they view that what they have done previously is going to be sufficient. They're giving it more time for it to take effect, to bring inflation down, in countering the remaining inflationary pressure. That's why they left it at 1.75% without that hike. Okay, and US Swiss franc right now just below, just at that 9050 level. I do think that it's going to sit there before pushing up again, further up. Okay, now that that's thrown me off my course, there is the press conference later, not learned. We might see a little bit of a press conference held, might see a little bit more volatility with this press conference, but the good thing is only going to be mostly onto the US Swiss franc, so I'm not going to dwell on this. Right, then after that we have the K, which we spoke about already. Okay, so now let's look at the charts. Dollar retracing back down a little bit. Okay, now today is the 21st of September. We're not OMC. Okay, so now we are here. That happened. Take all that away. Dollar index went up to test 105.65. That's done. Now is look at that. It's sitting at that 23.6 level and retracing, right? And it looks like, I mean, a lot of you are going to say this, it looks like it's going to come back down to 38.2 to cover that gap for push back up again. My main concern would be any line zeros on this. Gonna come back down. Yeah, so the main thing, and you guys know I don't like trying to guess retracements because it can retrace further, and it's pushing back down right now. I think it's pushing down now because of that euro dollar climb. Right, euro dollar climbing back up, dollar lose some ground. Okay, so what I think is going to happen here is if it comes down to this point, it would come down to 105.30 before we're going to see it push back up again. No, I think it's going to come down a little bit more. About there. So 105.30, 10, I don't see it coming down to 105.20. So I'll say 105.30 back up again. Okay, so main thing is that dollar index is retracing. Could reach 105.30. Look for retracement to complete before upside continuation. Okay, there we go. So might retrace down to, could retrace to 105.30, which is about there. Close that gap. Look for retracement to complete before upside continuation with first at 105.65 level as a target. Then have this here 105.90. Next, I'm not ruling out the chance that we could see it reverse, but I think that's quite a low chance. Okay, 102 to 105.90. Okay, I'm happy with that. So it could retrace down, but overall I'm looking for it to come up towards that level. So overall, still looking for that strength on the dollar index to continue. Then looking on the Kiwi dollar. Okay, Kiwi dollar, I did get into this. Like I was telling you all, that dollar weakness that we saw. Yeah, Buba, as I was saying, just ignore what happened on that. I think this was a price, that tail there, the price feed from whatever price feed from, just ignore that spike. Okay. As the dollar index shot down last night, right, all the way through to midnight my time, as it was weakening, and then before pushing back up on the news release, that actually gave us a good, better entry levels, because I was looking at the Kiwi dollar to sell down. So as it pushed up towards that resistance level of 0.59, almost 0.5990, which you would see that we had that resistance from way back. That actually had a good opportunity. I did not get into it straight away. I would love to have got in before the news for that big push down, but I got in about halfway as I was updating you guys about that move, right? About the FOMC rates decision, and reading through the statement, I was getting in as it was pushing to the downside. Traded it to that trend line. I didn't go all the way down to this point. I traded it to that trend line, then I was out. Okay, so that was, I think I came down to this point, put a break even, and then just let it run because it was good profits. So that was my Kiwi dollar move to the downside. Right now, let me clear out some lines. That one is done. Done. One is done. Take that one as well. Okay, so we did well on the key. And now I'm looking at this as it retraces. Right, so I remember that we were looking at, oh, look at that. Did not even retrace all the way down. It's showing a continuation. So it's interesting that the dollar is now still pushing to the upside, but Kiwi dollar is also climbing. I think most pairs are still, or Aussie dollar is dropping. So Kiwi dollar is pushing up a little bit. I would look for it to, now that assessing 23.6, needs to turn back down. Doesn't matter how far it's going to retrace, right? I'm not concerned whether it's going to hit this level and turn down, or whether it's going to go up to here and turn down. Ultimately, I will only be confident to sell below that point. Okay, so what I'm looking for is to sell down on the Kiwi dollar below 0.59. So 5895. Take profit 30 pips to that recent low. Stop loss 20 pips. Could even go even lower than that. So we have that point there. Continuation to the downside. I would even go quite tight on this. No more than 20 pips on the Kiwi dollar. Right, so it's a break of that trend line, so I'm quite happy with that. Looking for it to retrace. I would like to, what I would really like to do would be for it to come up, test, and then once it breaks, sell down. So that's happy. Okay, good. I'm happy with that. 5895, stop loss 20 pips, take profit 30. Fact, can go for 55, and maybe can have a bit of a consideration at 58. So I like that. I like that one. I would sell at 5895. 895, stop loss 20, take profit 55, with a consideration at 58. So consideration at 0.58. There we go. All right. Took a while to get to this point, but I'm now. Then onto the Aussie, same thing. I did this. I didn't get that one, but I did that on the Aussie to the downside as it came down, broke that resistance, now turned support, now turned back resistance level, and I caught that on the Aussie 40 pips to the downside. So it kind of worked as planned, right? Push up more than we expected, but back down again. So that one worked very well for us. I did not get into this one, but that would still be valid now. Okay. If you did not get into this already, if you're not in this already, then very similar to the Kiwi dollar would be breaks down from this point 0.64. So below 0.64, I'll give it another 5. Right? You have a 30 pip move to the downside. Keep this quite tight, 20 pips. You can even go for a tighter stop loss on this. Right? So I would say that this would be a trade where if it comes down and it triggers my trade, I would even be looking at 0.64. If it breaks down from this point, if it breaks from this point, closes below, I could get in. I'll be looking for a 30 pip move to the downside. As quickly as it moves down, I would move my stop loss to break even just to secure, because I would even be looking at a 15 pip tight stop loss here on the Aussie dollar to the downside, continuing on with that trend. Okay, could it retrace? Could come up to test, but we are looking at the dollar possibly starting to push back up. So no matter what, I'm only looking to get in 0.64, 15 pip to 35. 0.4, stop loss 15, profit 35. The downside. As we are heading towards the end of the week, and it's going to consolidate there a little bit, might push up before coming back down, but as we're heading towards the end of the week, might see, I don't want to gamble that it's going to break any major support level. I think it could come down to that point, and we'll look into it next week. Okay, so with that, then the US yen, I was very keen on the US yen, was buying it to the upside as it broke above that resistance, right? So I liked how it came back down, broke above that resistance, was buying it to the upside. I got out of it this morning at about just below that one as it struggled. Where was it? As it struggled to break, yeah, as it tested 148.40 and I started push back down. I closed out about 148.30, about there, as it's because I started thinking that it was going to come back down, so I closed out of that trade. So that was the US yen done, but look out for this, right? So I was telling you about how the yen would spike up, consolidate, and then after that spike up. Now on a smaller scale, it's done similar thing where it's spiked up, it's consolidating, might be looking at another push upside. But remember that tomorrow we do have the Bank of Japan with their rates policy, with their policy decision, monetary policy statement. This is between 8:30 a.m. to midday, so that's a most likely about a 10 to 11 o'clock timing, GMT plus 8. So what I would be looking for here, I would be looking for the yen to be at about 148.80. Okay, I'll be looking for it to climb up to that point. That's why I'm not going to be looking at any trades on the US yen. And then at this point, we'll be looking for that next move. Right? We'll be looking for that next move because any adjustments to monetary policy on the US, on the Bank of Japan, could see the US yen come back down again. Right? So wait for it. Look for the US yen to climb towards 148.80, and then we have a straddle position there on the US yen, which I'll update you as that move develops. Okay. For look for price to reach 148.80, potential straddle on DOJ. Okay. So what I mean by that at this point you could have, if it does climb up to that level, you could be looking to sell 148 below 148.60. Take profit would be a good 80 pips to the downside, almost 80 pips. Stop loss 20 pips. Right, very good risk to reward there. Or look to buy up if it breaks above 149. Give it a bit more space. Then 4 time frame. Have one here. There, so it's about that 61.8. 1.8. Okay, so it's about there. Back to the 81. Right across. A potential straddle on US yen. Good 70 pips again. Stop loss in this case will be about 30 pips. There you go. That's your straddle there for the US yen. Right? Nothing for now. Wait it out. Let's see what happens. If it does retrace back down, let's say it doesn't sit there, it retraces back down, then this straddle could also be applied at that point. I'll update you as the price moves. So price to reach 148.80. Straddle on, okay, happy with that. Any questions so far? I think today's session is going to be a bit longer, but any questions so far, let me know. And do help me out. Click that like and subscribe button. Then onto the pound dollar. Look at that pushing down because of the dollar index climbing back up a little bit. It's the same thing, okay? So what's going to happen here? We are now approaching 4 p.m. We have Bank of England's decision at 7 p.m. So that's in 3 hours. If the Bank of England does what similar thing to what the Swiss SMB did, holding rates at 5.25, right? Like BL was saying, there's a 60% chance that keep rates on hold at 5.25, then we're going to see a similar move to what happened here on the US Swiss franc. Holding rates, then we're going to see it bounce. No, wait. Holding rates. This is the Swiss weakening. I would love to see it bounce, but I do think that it's going to drop. And if you look at it, 3rd of August and the 22nd of June, where they hike rates by 25 basis points. And I think I've done this before, but let's just do 3rd of August right there. Third of August, 7. So that move there. Right? So see that it came down a little bit, then pushed back up. This was the 3rd of August where they took it from 5 to a 5.25 at 7 p.m. That was that news there. I just put it one beside it. So it spiked down a little bit before pushing up. No clear directions there on pound dollar before pushing back up again. Then on the 22nd of June, where we saw a surprise 50 basis point rate hike. That point there. Right, so we saw the pound dollar spike up before continuing back down again. So you can see that based on this, thank you, Kind Owl, based on this spike up and down with a 50 basis point rate hike from 4.5 to 5%. But you also notice that within the hour, the pound dollar remained relatively unchanged. Okay, and then again on to August, spike up and down and remained relatively unchanged there on the pound dollar with that news release. That was a 25 basis point rate hike. So what I would anticipate here on the pound dollar would be that it's going to spike up and down along this support level of 1.23. But as we anticipate that the dollar index could push back up, right? I would maintain that straddle. Yeah, okay, I'll tell you what we'll do here. I want to see it sit around this level. That one away. Okay, I want to see it maintain along this level for the next couple of hours with the news release at that point. Then again, another straddle here on the pound dollar. 1.2335, 1.2330. Take profit with 60 pips to the upside, stop loss 30 pips. And because this next level is quite far away, right? We have an interim level there, and next levels are very far away. I would say that this case breaks down. It's quite near here, so I would say you can also be looking to do below 1.23, so 1.23, 1.2295. Again, stop loss very tight here, about 20. You can even do 30 pips, 30 pips here. Then you could go down for that 6. So I'll maintain that, and that would be what I'll be doing for the pound dollar with the news release later. I'll look for it to sit around that point. I could even go down to 1.90, 30 pips. More happy. Then okay, so a bit of a different approach just because of small news events. Interestingly, is usually I do run over the last couple of times I've ran trading camps where we get people off the location during this September period because of all that major central bank news, and we trade live together, sitting in a room. So that's what we've done a couple of times before. So this is what I'll be looking for on the pound dollar. Okay, so I'm going to copy that there. Say that look for price to maintain along 1.23 potential straddle on DOE position. I'll share that straddle. I'll share that chart later. Kind of. I used to. I don't anymore. But I might be looking at reviving that, but not on Telegram. We do have the Discord channel though. Kind of. You can not a signal service, but an community. That then looking at the euro dollar. That one away. That was a current view. Euro dollar. As we were looking at the potential push to the upside there on the euro dollar. Now, with the way that it's finding this support, right, and it's came down, broke that level a little bit, and now retraced back up, I think that there will be many people who would be looking to buy it up. Buy it up, thinking that it's come down, it's grabbed a bit of liquidity, it's going to push back up. You could be looking for that upside, but it is going to be risky. Okay, 1.0665 could be looking, and a lot of people will be looking at that 30 pips, good 60, 70 pips back up again. Yes, but I do prefer for this continuation down it, because you would be, with all the other things that we've been looking at, pound dollar with the straddle, you got a lot of other opportunities there. I would say maintain a continuation to the downside, 20 pips, 45, 1.0625, 20 pips to 50 pips. Cool. So I'm gonna sell 1.065. Stop loss 20 pips, take profit. That Swiss franc we've done already is likely to continue climbing outside. So it's hesitating a little bit now because it's outside Bollinger, but I do see that it's going to continue towards 9.1, then 9.150. So US franc, could you buy it up at this point? I think because it's moved at a big spike, I wouldn't be looking. So 9.106. I don't like where the stop loss. The only reason why I wouldn't be looking, you could look to buy this up, but I'm just not happy with where the stop loss could be. So, right? So I would say that could be looking to buy this up. Break. If you really wanted to get into trade here on the US Swiss franc, then I would say above 9060, 906070, stop loss 20 pips, right in the middle there. Take profit. You could go for 30 or 70 pips upside. But I don't, tell you what, it's done its move already. Done its move. So US Swiss franc spiked up. Look for continuation towards 9140 resistance. 91. I don't even think you'll get that far. I don't get that far. I come up towards one about there. 0.9. Okay. Yeah, why I wouldn't do anything? It's just that move has happened, right? And for this to continue up, it's dollar index strength. For the dollar index strength to push up, then we do have a lot of other trades. This might be overextended already. Dollar strength recovers. You have euro to sell down, back up a little bit. Pound dollar, have US yen not really. You have the Aussie dollar to sell down. You have the dollar to sell down. So I think that there's a lot of other trades to be had rather than to try and force something out on the US Swiss franc, which might be slightly overextended. US CAD bounced back up above that trend line, held at that resistance. That move is no longer. I would say that it's consolidating. I'll move this right across, say 1.3510 upside with that dollar strength. Bring this back up. Consolidating for that push up, you could even be looking at 25 pips tighter. The breakout to the upside there. CAD. So that CAD by 1.510, stop loss 25, take profit. Okay. Have it. Dollar retracing. Let's look for it to retrace down to this level before pushing up. Cross that. Work out. Most welcome there, Pips Apprentice. Luck with work. Then gold. Right, gold yesterday we're saying straddle, upside downside potential along 1930. 1930 again, as we saw, that dollar weakness pushed it up towards that resistance. Then that dollar strength pushed it right back down. Now with that dollar strength, you are looking for, came right back down, broke 38. If it breaks below 50, which is 1924, breaks below 1924, then you would look for it to get towards 19, about 1917. So dollar strength to continue would lead gold to push lower, breaking below 1924, would come down towards 1970. So gold below 94 could 19 sit. Raise, push up. Okay, good. Took a little bit longer than usual, but we did go through. We did see what happened there on the Swiss National Bank. Surprising markets again, holding rates at 1.75%. And then, with the Bank of England and their rates decision later, 7 p.m. GMT plus 8, we have our potential straddle setup there as it maintains along 1.23 level. Bank of Japan decision tomorrow. We also have a potential straddle either at that resistance or lower. That's all good. Any further questions? If you have not already, do make sure you join the Discord channel, and I will see you on Discord. Please trade well, trade safe. If I don't see you on Discord, I'll see you tomorrow. Same time, same place. Take care now. Thanks, Carsten. Thanks, Val. Thanks, BL. Thank you, everyone. Take care now. Bye-bye.